Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending December 20th, 2024. Just before we get started, some housekeeping. This will be the last review of 2024. The next edition will be on January 10th, 2025. So it's been a busy year, a very interesting year. Next year is also shaping up to be pretty interesting. The title here is Bracing for Trump 2.0. This is where we'll be focusing here. The Fed is bracing for Trump 2.0. Markets are reevaluating their views for growth, for inflation, for central banks, for markets in 2025. So we'll give you the picture of where we stand here and where we believe things are going. But before we do that, let's start with a look at this week's markets at the close on Thursday. So negative week for bonds, for stocks, for everything versus the USD. So the Fed on Wednesday, of course, with its decision and its messaging, it was a tough one to follow, but we'll dig into that in a few minutes. But the Fed is hinting that it might be more on the sidelines than the markets were expecting in 2025, and of course the market is repricing that because markets were going up in a straight line with very low volatility since the election, and now maybe some sense is returning to the market. So let's say the pricing here is reflecting a bit more risks for 2025. Still year to date, 20% on the TSX, 25-30% for the US stock market. Canadian dollar down 8%. Full disclosure, at the beginning of the year, we're expecting a positive year for the CAD. We were wrong there. It was mostly the USD that has been very strong through the year, but also the Canadian economy is underperforming. The market is getting very downbeat, and that all the risks are priced in, and now we have some political turmoil. So all of this, combined together led to minus 8% on the CAD, but we are starting to build opportunistically positions for the CAD to rebound in 2025. We see that the market is max long on the USD and max short on the Canadian dollar, meaning that the speculative positions are extreme both sides. So we could have just at some point a relief rally on the CAD. Our models are telling us that the negative view on the Canadian economy is pretty much priced and baked into the price. So starting from here, can you go lower on the CAD? Maybe, but the odds are tilted towards an eventual rebound. So maybe it's not going to happen in January, maybe not in Q1, but we do believe that building opportunistically a position now to position for more CAD strength in 2025 is a winning trade. And also price of gold, we've been very positive on gold since late 2023. We came out of that position, in Q4, and now we've taken the opposite position. Now we're starting to be short gold because the factors that were supporting gold 2024 maybe might reverse in 2025. So we're starting to build a position there. So still very slight positions, and we'll be keeping you informed as we move forward about how our views evolve on these. But this is where we're standing right now. So the Fed now, an uncertain path ahead. We had the third cut of in 2024 this week. We started with 50 basis points, now twice 25, so that means 100 basis points of cut. But now if you look at the chart on the right, the thicker line is what the market is pricing starting from now. And interestingly, market is pricing that will go all the way to 4%, so 2 more cuts and then stay there, which is in line with what the Fed is telling us now with its dot plot. It was pricing in, it was hinting at 4 cuts in 2025 in its latest forecast in September. Now it revised that to 2 cuts in 2025. The expectations for inflation were revised higher by a fair margin to 2.5% on the year. Growth expectations are higher. So the Fed is moving forward its adjustment to Trump policies now rather than adjusting everything in March. So this is how we see it. And Mr. Powell was clear that some Fed members, some FOMC members rather, said that they had adjusted based on their expectations for Trump. Some didn't, and some wouldn't say. So that it's partial now what we have, but the Fed was expected to wait until we have more clarity at the next exercise for forecasts in March to integrate all of this, and they did some of that earlier. So it gives the market a glimpse into what's to come, and the Fed is quoting uncertainty and maybe a more cautious path. So this is what is explaining the reaction here. We'll see what the Fed speakers say in the next few days and weeks, how they describe this uncertainty, but this did have an effect on the markets. Now, if we look at a few of our charts where we stand at the end of the year, so the first one is one of our main leading indicators, which is the global monetary policy cycle, the red line here. As you can see, it's very positive for 2025. It's a glimpse into the future because it's a leading indicator. What it's telling us that there's been so much synchronized cutting from central banks around the world recently that this bodes very well for 2025. The blue line is a proxy of the global economic cycle, so this is pointing towards good things. Of course, the global economy outperformed our index in 2024, mostly from the solid performance in the US and the fiscal deficit, but in 2025, can the deficit still grow? Big question mark here. So we'll see if again we get this strong growth. But if we go to the next chart here, the consensus is showing solid, decent growth in 2025, but it doesn't mean that we'll be having massive growth. And on two charts here that you had on your screen, so on the left is 2024, on the right is 2025. And if we start from the top of each chart, so the first line is China, 4.8% in 2024. This is what's expected. The year is almost done, but we don't have the final numbers. And next year will be 4.5. So still decent growth, but China continues to slow down. The black line is global growth, 3.05% in 2024, 3% expected in 2025, so pretty much the same thing. Now the US economy, the blue line on the left, 2.7% in 2024. In 2025, as you can see, the consensus has been readjusting higher since the election. So it's saying Trump is more and more bullish for the economy, but still the consensus is for 2.1% growth, which is below what we have in 2024. So it's a slowdown for the US economy. Still positive growth, but still slowing down. Canadian economy, 1.2% in 2024. Consensus is at 1.8 for 2025. So an acceleration here, and the European economy 0.8 this year, 1.1 next year. So yeah, an acceleration, but still weak growth. So this is what the markets are trying to, the forecast from the markets, with everyone trying to understand and grasp what Trump means. So yes, could be positive for growth, but not as positive as some might expect. And if we go to the next slide here for inflation, consensus is seeing broad disinflation in 2025, but the Trump factor is slowly crawling in because the expectations for 2025 are starting to get revised higher pretty much across the board. So again, if we start with the chart on the left, global inflation 4.5 in 2024. That's the dark, the solid black line. The dashed black line 3.7%. That's for 2025. So disinflation here in the US 2.9% in 2024 to 2.5% in 2025. So inflation still above target, but disinflation here in Canada 2.4 this year, 2.1% next year. Europe 2.4% now, 2% next year. So that's disinflation, but you see that the consensus is still adjusting higher. So let's see what we do get from Trump and how things unfold. On the right, these are the market expectations for inflation. Break-evens are still well behaved, 2.3% in the US over the next 10 years, 1.8 in Canada. So above target in the US, below target in Canada, but still around the target. So markets still well behaved on their inflation expectations. And finally, central banks, Federal Reserve, top left, next meeting in January, market is giving 96% odds that we have no change, so no cut in January, and after that maybe a cut in H1. The market is not quite sure. As you can see, there's no clear consensus. Maybe starting in May and June, if you add all of the odds from 4.25% and below, you get something that's significant. But market is a wide dispersion of when the first cut will come. Bank of Canada, bottom left, Markets are pricing in 2/3 odds that we have a cut of 25 basis points in January. After that, maybe skipping in March, and after that, the odds are climbing again for another cut by the summer. We still think that we will be seeing 3 cuts by mid 2025, but there's a lot of uncertainty based on Trump policy, trade tariffs, and all of this. Top right, European Central Bank. This is where cuts are expected to continue until mid-year. So the year should end somewhere around 1.5, 1.75 on their leading rate. And bottom right, Japan still struggling to hike its leading rate. This week there was a decision not as hawkish as expected. So will they be able to hike at some point? The jury is still out, but they're going in the opposite direction compared to the other central banks of this world. So very interesting year ahead. Will growth be supported by Trump? Big question mark. It depends on the trade policies. Is Trump really inflationary? Likely so in the US, around the world. Not quite sure. And we'll see if the Fed is really on the sidelines as much as it thinks in 2025, because we've had, for example, overnight, the debt ceiling negotiations that failed. Trump tried to use his weight to have the kind of deal that he wanted. It failed to pass in the House. So the balance of power remains in place. So Trump can do a lot on trade and tariffs, but on fiscal spending, he needs to work with the House and the Senate. It's not clear that he will be able to go through with all of the reforms that he promised. So maybe more status quo than the market expects in 2025. And if we have more status quo, that means we'll likely have more Fed rate cuts. So big question mark here for 2025, but we'll keep you posted as the year unfolds. So it's always a pleasure to serve you. It was a solid year on the markets, a very interesting year also as an economist. Hope the market treated you well through the year. Enjoy the vacation, and wishing you all of the success in the world in 2025.